Hi everyone, I'm Chad Shoop with Automatic Profits Alert, and today I want to talk about the recent correction with stocks such as Advanced Micro Devices or Micron Technology. A lot of these semiconductor chip stocks, they've really taken it on the chin lately. Some are down over 20% over just the last couple of weeks. So they're truly going through a correction, some would say a bear market. And the question is, when do you jump back in? I mean, assuming you hold them now, when would you exit as well? So when do you jump back in? Well, when I follow these stocks, and I do in our portfolio, I follow them every day, so I'm tracking them closely. And the correction, it came out of nowhere. I mean, there's reasons for it. People were taking profits. I mean, Micron, it had shot up just a few days before that it went through this correction. So it had a really sharp spike and then pull back where people were taking profits. But to fuel that, we also had the tax bill that came out of the Senate that had the A&T, the alternative minimum tax for corporations, still left in the bill. So at that point, they didn't really know how this would be such a benefit to tech stocks, which has helped fuel the rally over the last year. So all this kind of compiled into one great sell-off for the sector. So when do you jump back in? How do you know it's right to jump back in? Well, you can do this for the sector or for each specific stock that you want to own. So what I always look for and what I want to see is a stock to make a higher low. So what you look for is the previous, after this dip, there's going to be a point that you can look on a chart and you'll see basically it make this V and it comes back up. So you want to look at the chart and find that spot. So now we're going to come back up, and that's going to be happening over this week and next week. You're going to see a little bit of a bounce there. Now, this is just buying and selling, going back and forth. Now, the question is whether it will hold. So what you want to use is that previous point, the bottom of that point. That's your key level, okay? If the price goes below that, then you want to get out of the stock and stay out of the stock for a little while. If the price can stay above that, then you wait for it to make another point, and then at that point you want to buy. You want to buy the stock, you want to buy a few of these stocks, and you want to hang on to them and ride them higher, okay? And I mean, and you can use that key level as a spot that you want to get out. So pay attention to whether or not it'll make higher lows, and that's how you know whether or not you want to get in. And the same for getting out. Use that point, this V point that we're going to see set over the last day or two or over this week. And then if it goes below that level again, then that's time to get out and then just reassess the situation, reassess the position, and look for a better entry point. Well, that's all for my video today. And if you like it, be sure to follow us, subscribe to our page. And until next time, this is Chad Shoop with Automatic Profits Alert.